Hi everyone, it is Stephanie. I know it's been a minute since one of my last updates, but I have been basically, I guess, in a hole for the past couple months, sort of switching gears from earlier this year when I was really focused on sort of investments and stock equity analysis and fundamental analysis and all that stuff. And I've been taking a break for the past couple months to kind of focus a little bit more on actually real estate. So just as some context, I've been recently looking, and still I'm actually looking in the Austin area, specifically looking for multifamily. There's not a lot of multifamily in Austin. There's a handful of duplexes, but I figured I would take you along for the this sort of updated process that I have where I'm using a new set of spreadsheets to basically evaluate different listings, compare listings, and think through my overall sort of real estate process as a very data analytical person. So I'll just take you all through it. I figured I have a couple updates to make to my spreadsheet today, and I figured I'd just record a video and talk you all through how I kind of go through things, how do I pull out data, how do I actually compare things. So just as some context, today we're going to be looking at 3 different listings, one of which is been on the market but just recently had a price drop, and 2 other ones that have actually just recently closed. I still actually punch these into my spreadsheet because I want to I want to be able to just continue to have a read on the market just to understand, what price things are going for and stuff like that, so that I can have a most accurate view of the current market as possible. So we'll just start with this first one, 1804 Prairie Knoll Court. This one just recently had a price drop. So the way, just talking through this spreadsheet really quickly, I've got this sort of like master calculator spreadsheet where I punch in a lot of information about a property, and there's all these predetermined formulas and stuff like that that kind of like help me understand how the numbers will work out given a set of parameters. So yeah, that's the calculator spreadsheet. And then I've also basically got this separate spreadsheet that effectively acts as like a database. As I'm punching in and looking at these different properties, I can save all the information here, which is helpful because one, it allows me to repopulate information back into this calculator if I want to revisit a property without having to like punch in everything manually. And then also it just helps me get, a really quick like comparative like sense of, okay, if I'm like looking in this zip, right? So for Prairie Knoll Court, they're in 78758, which is Northern Austin. If they're in this particular neighborhood, I can get a really quick sense of, what do the sort of price per square feet look. I can just basically do a lot of comparative analysis like back to back really quickly. And yeah, we'll sort of get into that a little bit more. So yeah, those are the 2 major spreadsheets that I work off of. In this case, I already pre-populated the information in here. So, because I already had this punched in from before, because this has been a house that's been on the market. So I updated to 566. I guess just to quickly break down the different parts of this calculator. So all the cells that are colored yellow are all the ones that I punch in myself. So I just record some basic information about the home, year, square footage, the type. I mark both current rents and then also the market rents, which I get from a separate service called Rentometer. And then if it's closed, I put in this information as well and I record that. So the skeleton of a spreadsheet, I believe I stole from, I forget, it might have been Jay Scott. I forget. I think the rough structure looks kind of like this, although I've like done a lot of my own modifications over time. But basically, when you look at it, a lot of the key information is, of course, the purchase price. If you're really into burring, so if you follow Bigger Pockets, this is buy, renovate, rent, and refinance. Yeah, so it's 3 R's. They really care a lot about after repair value so that you can get a sense of how much you can refinance for and get money out. But in my case, I'm buying for the long term, so it's not something that I'm like tracking super closely. I track also closing costs, which I estimate as like a 3% of the purchase price. This is probably over what it probably actually is, I found, but it doesn't hurt to be a bit conservative. Repair cost, which I sometimes will put if if I am seriously looking at a property, but oftentimes I don't actually, most of the time I'll actually just punch in the high level information. I won't actually look at the pictures of the condition until later after I've actually seen if the numbers might potentially work for me. So for now, I usually just leave them as blank. I also track appreciation pretty closely because for me, I guess this is where when it comes to real estate investing, there's oftentimes this trade-off that people talk about between cash flow, right? Which is you can buy a really cheap house that gets a lot of rent and you can make money, you can just like generate cash, right, month on month. But typically with a trade-off that house will typically not appreciate very much, so you don't get a lot in terms of house equity, versus going sort of the other side where you really optimize for appreciation, so where your cash flow might not be super great, like in these cases where you're literally losing after expenses like $1,000 a month. So right over the course of a year you're losing basically like $13,000. But at the sort of flip side, the general trade-off you typically get though, right, is with higher, usually if you lose more in cash flow, typically that means that it's in a higher appreciation market. And so so that's something that I also track, because that's something that I'm looking really closely at. As I'm not sure, the background of everyone sort of watching this, but at the end of the day, I think everyone has to decide for themselves like where they want to fall on the spectrum, right? And like, do you want to optimize for cash flow? Do you want to optimize for appreciation? And you can kind of figure out for yourself what your criteria are, what your investing style is, and what you want to optimize for. But in my case, I look at appreciation. Actually, okay, I feel like I should do this from scratch so that you guys can kind of see how I actually punch this in. Okay, so we'll do that. Okay, so let me just start over from scratch. I won't submit it since I already have it, but what I would do is, okay, I'd type in, how do I type Prairie Court? The zip code is 78758. Square footage is 1865, right here. Wrong window. The year is 1983. Okay, and then from there, the purchase price is currently $566. So I put in here, that automatically multiplies it out. So I'm going to type in as many numbers. What else I want? Okay, so appreciation numbers. You can get that. So I don't know if everyone's MLS. So the MLS is basically the portal that you look at all of your real estate listings through. It is a pretty shit website though. So it's taken me quite a while just to, so it is so hard to compare things that's why I've kind of had to build out all these different visualizations for myself. And there's some information on there, but it's really not the most comprehensive. So I'll sort of talk you through where I get all my different data points from and sort of what I draw from this versus getting from other places. So appreciation, we want the last sales price and then the number of years between that last sale, so we can calculate what the appreciation has been. This is, oh, I have to refresh it. It's been a while. This is where I guess there's, there's a lot of talk. Oftentimes people have mentioned about how, appreciation is not a sure thing. You don't know how the trend is going to, pan out. It could be slower than it has been in the past. It could be faster than it has been in the past. But this is at least one way that you can calculate what it could be, just sort of given like historical trends. And, depending on what area you're investing in, like you can kind of try and extrapolate from there. Like, do I think the future prospects for this region or this city are like, more optimistic than before? Is it weaker than before? And you can kind of like deviate from there. Another way you could do this also is, I don't have a screenshot of this right now. Maybe for a future thing, I'll try and dig it up. But you can get actually data probably from your agent and also from other sources like Zillow probably that give you appreciation by zip, which like historical, maybe year on year or month over month, or actually I guess you would want year on year appreciation numbers, which you could also use as a proxy for this, which would be a little bit less specific because this would be for this house, but it would give you another potential read of what appreciation is. Let me see if I actually have. Okay, so I've been looking in Austin for probably since end of last year, and this is something that I pulled together this I think I got from Zillow maybe, I kind of forget actually now, but basically this actually tracks for all of the different zips in the Austin like Round Rock MSA area. So it tracks like what are the zips, how is the appreciation basically changed year on year for the past 15 years. And so it's kind of actually really quite interesting to get a sense of. So yeah, it gives historical numbers, and then I also just like looked at different how it sort of like netted out over time, like min max, averages, stuff like that. And then also compared it with like I think this is the median or the average. past your average price for the home in that zip. I did this sort of as initial original step to help me narrow down what kind of neighborhoods I was looking at. And so you can also use this as a gauge for appreciation. So like, for example, last year when I pulled this was back in, I guess, August, September timeframe. At that point, year to date, it was around 8%. It's probably like way stronger right now, honestly, because the market's been going insane. But yeah, that's just another view. Okay, anyway, enough said there. Let's look at the history for this. Okay, so if you go to the history tab, it basically shows you what the history of that particular listing has been. Oftentimes people do sometimes put rental information on here. So you'll see that interspersed sometimes. So it's a bit noisy, but as you can see, this property's actually been sitting on the market for around 2 months, which is crazy given that for the most part, the market in Austin has been pretty nuts. Of course, I guess it's been clearly pretty overpriced because it started from basically 620 and it's all the way down to like 566 now. So they've dropped by basically like almost 40 grand. 40 grand? I can't do math right now. No. 50 grand. Okay, anyway, so we're gonna ignore that. What we want is basically the last sales price for this property, which looks like it was 154. I'm just gonna say 155 to round up. And number of years since last sale, it sold in 2013 or 2003, which means it's been 18 years since that. So that gives me, it automatically calculates for me then what the appreciation percentage has been for the past 18 years basically. So it's been around 7.5%. It uses that to actually help me calculate like how much appreciation would be going forward, right? Assuming that this trend continues, and actually calculates for me, in addition to my cash flow numbers, which is incomplete right now because I don't have market rent. In addition to cash flow numbers, it gives me what, if I were to look at appreciation for the next year, it actually like, I guess amortizes that at a monthly basis and tells me like how much equity am I building basically, assuming that this appreciation percentage continues. Okay, so we're gonna ignore this because we got the information we wanted. Oh wait, crap, is my thing wrong? Fuck. Okay, I think my window has been off this whole time. Oh wait, no, just that one. Okay. Oh, all good. Okay. Okay, so we got that. The next piece is if we scroll down, there's all this information here. I don't track all of it, honestly, but so the ones that I want now, I want to get a sense of what are the units here. So I'm buying a duplex, that's 2 units. In this case, it is a 2-2 and a 2-2. So I'll put this here so I know. It is currently not rented out, as you can see. So it says 0 and 0. So yeah, this place is empty. So I'll just say 0, 0. And then I also want the tax rate. So it is 2.23. If you want to be safe, you can verify this for yourself, just like looking into the county records. But for the most part, I'm just going to use this as an approximation. If you have if you're buying in a place that has an HOA, it will usually tell you that here, which you definitely want to put in because that is something you want to. You can put that in here. Definitely something you want to put in because that will factor into your calculations. But I typically am pretty like staunchly anti-HOA, so all the places that I look at generally don't have one. So that's something that I ignored there. And then I'm just gonna pause for a second. And then from here, what else is next? Okay, so we want market rent so we can finish this out. So if we look at Rentometer, excuse the noise, my roommate is going outside. Okay, so if we go into Rentometer, this is a service that I use to basically get market rent. It basically just scrapes all of, I believe they just look at probably like Craigslist listings, Zillow listings, stuff like that to give you a sense of approximate rents given a particular address. So in this case, I'm in 1804 Prairie Court in Austin. Okay, and then I'll type in, it's a 2-2, so I'll put in 2-2. That looks pretty good. I am buying a duplex, so that's what I put in here. If it's an apartment that you're looking at, like you could do that. But yeah, okay, so we're gonna pull that. In this case, it looks like there's only 2, so you can increase the radius. Is the radius? Yeah, so you can include more if you want a bit more of a representative example. So, okay, it looks like So they give you basically the average, median, and 25th percentile. If you want a more detailed report of like what exactly it is, you can click this. I typically don't because I don't really care. I'm usually just doing this to get a really quick sense of like what the rough market rent looks like. In this case, I try to be conservative, so I usually go 25th percentile. It's not that close. In this case, it's pretty close to the median, so it doesn't really matter, but I'll just say 1450 to be safe for both sides because both are 2.2s. And that actually completes so on a property by property basis, this is basically what I put in typically. And so it gives me all the major stats that I want to look at. It gives me what the net cash flow looks like. So net cash flow being basically, so what it does is this calculates, okay, this is what my monthly income is, right? Which is 1450 times 2, which is 2,900. It calculates what my monthly expenses are. So this takes into account everything. It takes into account, of course, like just my, the principal and interest. So they call it PITI, which is property, interest, taxes, your property taxes, and what's the last one? Interest and, wow, this is embarrassing. PMI, interest, insurance. Oh, it's a house insurance. Oh gosh, that's dumb. So it's not just PITI, which are usually like your major like expenses, but it also includes all of the other like small little things that you probably should be accounting for if you want to be like a responsible landlord. So it's, things like, budgeting a certain amount for repairs, a certain amount for CapEx, which would be, like if your AC system goes out, which of course in Austin, Texas is super important. You have to budget money to like spend on that. Your property management fee, especially if you're not going to be self-managing, that usually is a certain cut. And then all these other smaller little fees, right? So like sewer, in these cases, like this is kind of a property by property basis. Like if you're buying a duplex, for example, some of these things you can just get the tenant to pay for, like for example, water, if it's separately metered. What else? Yeah, like electric, gas, stuff like that, where they can pay for it directly. You wouldn't include that, but basically like expenses includes everything we include here. And basically sums that up in addition to the PITI that we talked about before, which are your sort of high ticket items. So I guess, I calculate PITI separately just to get a sense of what that looks like. Gross cash flow is basically what is your monthly income minus PITI. So not including all the sort of like small little things that we talked about that are, I guess you could say are like in some ways a bit more, not optional, but like add-ons, I guess, to be more comprehensive. Net cash flow is basically the number I look at, which is basically if we take the monthly income number and we subtract it by the total monthly expenses. So it's like the most accurate view of what your cash flow will be, take into account how much you have to pay for, your PITI plus all the additional expenses. So that's net cash flow. This is where I think every single specific investor, you'll have your own threshold for what you want, like what your personal comfort level is, right? Like if you're definitely doing cash flow investing, of course you want this to be positive or like, a certain level of positive, maybe like $100 or $200 a month or more than that. And then on top of that, you also get it also calculates for you your cash on cash return, which basically is this net cash flow number divided by the cash that you put in to buy the property, which includes basically, it won't of course be the full purchase price, especially if you're getting financing, but it'll include, it'll basically be, I believe, this number is divided by 852, which is, this number. So that includes your down payment, right? Which is, I don't know, 20%, 10%, whatever of your actual purchase price, the amount of closing costs, repairs needed, stuff like that. So that will give you basically, given the amount of cash you're putting in, how much return you're making. And so this is ultimately also very dependent on your financing terms. Like if you, of course, if you pay a really low down payment, so like say, 3.5% or 5% if you're using FHA, if you put in really low down, or if you put in a really low down, you get, then you put in much less cash, right? I can actually just simulate this. So let's say I do 5 instead. Oh God, why did it die? 5? Oh crap, I never update this, that's why. No. Okay, what is breaking? This is always fun. Okay, something somewhere is L32, D34. Okay, maybe let's not play this game right. Oh wait, this is, okay, why is this? Why are you whining? Okay, let's not play this game right now. I'll look into this later. But you theoretically could change this down payment number and it would tell you basically your cash on cash would likely, oh, now I really want to know, why is this not working? Okay, this number, D20 is that, which I have a number divided by D22, also has a number, D58. Is it because this is 0? No, that looks correct. Okay, D58 plus D21. Oh, this is no match. Oh, this is probably some dumb. Oh, shit. Okay, yeah, that's why. Okay, I forget how I do these switch statements work again. Okay. 2%. Okay. Oh, actually, if I just do 10%, I think we'll be fine. Yeah. Okay. So wait, why is it? Oh, okay. It's okay. So typically your cash on cash would go up if your down payment goes down because you're putting in less cash right up front, which means that your denominator is smaller, which means the number is bigger. But because it's negative, everything's super weird. So it's just more negative, which is wrong, or which is just like misleading. But anyway, we'll just go back to 25. Okay, so where was I saying? Cash on cash return. It is negative 8%. So obviously not great, right? Like of course you want positive return, but I think we also talked about how if you're going for appreciation, you will probably have to, deal with some degree of negative cash flow. It just depends on where you want to be. Okay, so after that, then we get depreciation. We talked a bit about this. This is basically this minus this over this, which gives you this percentage. And so basically if we extrapolate out, like this is where I believe here, this part of the spreadsheet kind of tracks like, so this part of the spreadsheet, I don't actually use this that often, but if you want to kind of like project out like over the next couple years, in 10 years, depending how long you're holding, right, you can kind of get a sense of how much you're earning over that period of time. So at this rate of appreciation, 7.5% basically, we're basically gaining around $42,000 in equity, assuming that that trend continues to hold. And if you divide that out per month, that basically works out to around $3,500 a month. So what I do then, in my case, is I actually add these both together so I can take into account cash flow plus also appreciation, which gives me a certain number. And then I have this total value number, which I actually kind of forget what this means. Oh, plus principal reduction, I guess, because over time, anyway, yeah, the number I guess I usually end up using is this one. And yeah, so that is in a nutshell all of basically what I put in when I'm looking at a net new listing. So we'll go through this process again for these sort of last other ones. But personally for my criteria, this is personally for me a little bit more rich than I would like to pay. Losing $1,000 a month is a bit painful. And so that is something that I'm not super interested in. However, I guess this is where there's another part of the spreadsheet that's pretty helpful. So this is basically a separate part of the spreadsheet that I built out to basically help me forecast out if I were to go up or down from the current price, right? Like if I want to give a lower ball offer, it would help me map out like, okay, how do all these stats change given the new price? So if I click populate, it basically goes and calculates out the numbers for me. So I don't have to basically do it myself. So as you can see, right, like right now we're at 566. It's around $300 a square foot. If we actually compare it though, I guess to the other houses in the zip, which is 78758, it looks like that it looks like it's like, within range. It's like a little bit pricier than the others for sure. But it's sort of like in the same general ballpark. So that's sort of what it looks like. And then if like this helped me like get a sense of, okay, if I were to keep going, like let's say if I were to offer like 540, close to 540, that would mean I'd be paying basically $290 for that. It would mean that my cash flow would be basically still around $1,000, but slightly less. And then it also gives me a sense of what that like total appreciation plus net cash flow would be, and then also a sense of what my cash on cash return is, and then also my cap rate, which is basically, I believe your total return. I forget always how is this calculated. It's M12.
is it this? Rental income for the year divided by total price of the property, D8. Yeah, over total price. So the cap rate basically allows you to kind of calculate, allows you to get a percentage that allows you to compare it against other investments. So you can get a sense of, how all these different rates of return compare across different asset classes. So, okay, yeah, so that's cool. Looks like in this case, even if I were to offer 30 below their current ask, which is already, oh, okay. Even if I were to do that, it would still be around negative 1,000. And so that's just something, I guess, that's good for me to know as I'm thinking about if I were to offer on this, like how much I would want to go and how far down I'd have to go for this to work for me. Okay, yeah, so this is this one. Let's just walk through the example now. Okay, so we'll clear this. And we will start over with the, oh wait, okay, this other last feature. Because I didn't save it. So there's another feature where basically I can like get information from my spreadsheet and like populate it back in the spreadsheet. So I don't think, I did save it. I did save it? Okay, well I guess I did, so whatever. Looks like that is fine. But yeah, basically I can punch in, did I click submit? Is that why? So basically if I click submit, it saves it to this spreadsheet and then I can click populate to populate the information back into the spreadsheet. So in this case, I want to clear because I want to start over and we will continue on with Costantino Circle. Did it? Okay, yeah, we'll just do this one. Okay, so we're doing 1705 Costantino Circle, 787,845. Square footage is 2268. It was built in 2001. All this information's here in this corner. Purchase price. So for a closed place, this is there's a slight difference. This is the price it closed at, and then the list price they'll include here. So what I do typically is I put the list price here, and then I put the closed price over on this side. So it was 525. Date was 6/23. And then, so that all looks good. Let's look at the historical. Refresh this again. And then if I click history, what is it? Okay, sometimes I will say you don't see it because they just don't have it. Okay, this case we do. So looks like the last one was back in 2016. So that was 210. Is that 15 years? I think that's 15 years. 15. 21 minus 6. Yeah, okay. That looks good. Okay, I go further down. I want to look at 3.2. It's 3.2. It's a 3.2. All this is here, right? 3.2, 3.2. The current rent. So one side is 1,300. Oh, clear. The other side, actually 1,395, which is the more expensive one. 1,300, which here and here. And then tax rate once again is 2.23. Okay, so that's all the information I'm gonna get from the listing. And then where's my rentometer? So yeah, as you notice, I like don't even look at the pictures honestly, because for me at this point, when I'm doing my initial screening, it's all just about the initial stats. And then if it looks good, that's where I'll start to take a closer look. So looking at a 3.2, show advanced options. Let's stick with that. Okay, this I'm gonna lower it down because that's a lot of options. So we've got 6. Whoa, interesting. Okay, note that like sometimes, so another thing I do is my agent gives me actually spreadsheets. So I oftentimes ask for a comparative market analysis called a CMA for different listings that I'm particularly interested in after it passes my initial filter. So in this case, I use Rentometer to give me a really rough sense. So like, let's say in this case, I'll just punch in 1,800. I don't know if actually that's accurate. That seems high given these current numbers. Because I think in this case, because house and duplexes are combined together, sometimes it could be inflated depending on what area you're in. Yeah, because like this could either be a really good deal or the comps are like, this comp is incorrect. So typically then when if there's a place that looks interesting, like, so for example, these stats would actually look interesting to me. I would actually ask my agent to send me a CMA so that I can kind of confirm this, just given the stats that he sends me. You can get it. So his CMAs that he sends gives me a breakdown of what the market rent is, and then also like similar houses that have sold recently. So I get a sense of comps for the price per square foot. So in this case, I think that's all the stats that I wanted to put in. So yeah, this is basically what it looks like. It's basically around like negative 250 in cash flow. The appreciation is like pretty strong as well. It's around, I guess, just under 6%, which nets out to just over $2,000 if you net those both together. I think, okay, yeah, so I think that's actually covers most of it. I will go ahead and submit this to my form, and then I'll categorize this. So if it just gets added to the bottom, and then I typically will add this to the zip that it's in so I can group them with everything else. This is super, so yeah, all the stats I put in basically get saved. What I like this feature for is it allows me to actually compare the cash flow numbers like comparatively against all of them. And get a really quick reference, because then in the future, if I'm looking at a new thing, I can say like, okay, for this new one, Costantino, it was, negative 250, and like I can see that, okay, that's like actually pretty good compared to, I mean, it's like decent, like this one was negative 200, but it's generally pretty good for this particular zip of all the things that I've seen in the past couple months. So I think that covers most of it. I'm guessing you might have questions if you're super new to this. And then so some of these, like I don't really change from thing to thing, because for the most part, basically I ended up talking to my agent to kind of get a quick sense of like what some of these things should look like. And for the most part, I use them across all the properties, right? I use the same percentages. I assume, a sort of like regular rate across all these different areas for like yard care stuff, garbage, stuff like that. I also factor in, so this might also be very like location specific, but I also try and factor in some degree of vacancy, just because of course that's normal. So I use 8%, and then I assume that every 2 years someone's going to sort of swap out. So that gets factored into I think it lowers my income slightly so that it's a bit more realistic. And okay, with that, I have to get back to that text that I got. So I'll leave it here. I hope this was helpful. I might do more of these, we'll see. But yeah, this is sort of a quick view of what the process that I go through to actually go through listings and process them in my head so that I can get a sense of how I actually want to action on some of these. So yeah, with that, I'll leave you there. Bye.